Hello traders and good morning. In today's intraday video update, I will update you on some markets that I'm tracking. Especially I'm focusing on dollar yen because I think that sooner or later stocks could see more upside from here, especially the US stock, which should have impact on very correlated dollar yen. Okay. At the same time, I will also, of course, as always, take a look on 10-year US notes, which is also driven by dollar yen pair. So firstly, here on the S&P 500, clearly we have a contracting shape. There is no chance to count this reversal from the highs in 5 waves, because you can clearly see this is just a sideways price move with some overlaps. So ideally this is part of this running triangle formation. What is a running triangle? It's a continuation pattern structured by A, B, C, D, E subwaves, where wave B will move into a new extreme. So actually you can see that we have seen a spike here above this wave A highs and then a reversal lower. Usually you will see for B waves of flats or of a running triangle that wave B will make a spike to a new high and then a quick reversal. This should be your key to label the wave count correctly. Okay, so actually this is a running triangle, as I said, and it appears that we could see a push to the upside if we consider a recent free wave setback down in wave E. So here I also have this 1 hour count, so you can clearly see this was a free wave decline. I should relabel this wave count. Okay, can do it like this. Okay, so this is ABCDE decline. Notice that wave E did not move beneath this invalidation level at 2248, actually 2247 maybe. So as long as we are above this wave C swing low, we are looking to the upside. Okay, so now let's take a look also on dollar yen. Now dollar yen, as you know, we have been tracking this corrective setback for a while, and it appears that we have something to work with the bullish view, because we have seen a nice reversal to the upside. If we go take a look on a daily chart, you can clearly see that this pullback actually fits nicely into a structure of an extended wave free of a larger degree. So ideally I see this as a correction. We have come very close to these former swing lows. There were a lot of noise in the previous downtrend around these levels, so I'm not surprised that market actually turned up from here. Also on the 4-hour chart, there is no way to count this in impulsive fashion to the downside. You just have too many overlaps. Okay, so as you know, I labeled this as an ending diagonal here in wave C of a second zigzag, and it looks like that this one is now completed. Also, ending diagonal is a very important reversal pattern that usually causes a strong turning point, and it appears that this is now the case. And from minimum perspective, when ending diagonal is finished, you should see a retracement back to the starting point of that pattern. Okay, so starting point of ending diagonal was here. Okay, so this would be my minimum upward objective. And if we take a look on the hourly chart, you can actually see that we have seen 5 waves of recovery here. Okay, from 112.55. This is wave 1, 2, 3, 4, and wave 5. I set and highlighted this as a short-term resistance in our update yesterday. We have seen a nice reversal to the downside back into the area of a former wave 4. Now some would say that this could be already wave 2. Yes, that could be the case, but normally I would expect something more longer in time. Okay, this is just for now. It appears not enough. Okay, it's also still early in the day. London will now open in a few minutes, so actually we have a lot of time before this wave 2 will complete. Maybe this will happen later today, maybe it will happen on Monday, early next week, but in either case I think that we are in a corrective formation to the downside and that market will turn higher here, as long as the market, of course, should be trading above this invalidation level. So if the S&P 500 is going to see higher prices, then this dollar yen should also stay above this support. Okay, so I'm watching this one very closely for potential new trade to the upside. Also, one market that is also very important, it's Nikkei. Okay, I think I have it somewhere here. Just a second. So Nikkei is also highly correlated, as you know, with our dollar yen. So here we have Nikkei. Actually, here's a nice, as you can see, potential flat correction, wave A, B, and drop into wave C. But what really matters to me is this strong reversal to the upside. Okay, even if some would say that this is only a corrective bounce, you still need 3 waves to the upside. Okay, so no matter how I look at it, I think that we will see higher levels, and I would focus on this. It looks like a one gap here around 19,500. Okay, so looking for more upside here suggests the dollar yen could stay in bullish phase as well. Okay, and clearly here on the weekly chart of Nikkei, there's very strong uptrend that is resuming now, so dollar yen should also stay in uptrend. Now let's take a look also on 10-year US notes. Now here I made some wave count on the 4-hour chart of 10-year US notes. Yes, we have potentially 5 waves to the upside. Waves 1, 2, extended to wave 3, and then you have this flat or maybe even a triangle here for a wave 4 and then a wave 5 to the upside. And this very strong reversal actually fits very nicely with the wave count on dollar yen and also with the S&P. So actually, if we are making our first leg down of a free wave of a pullback, then we should stay bearish here, which means the stocks should stay supported, so dollar yen should also stay above its low, which means that we have all pieces of the puzzles of all markets are pointing to the same direction and suggest the dollar could see more strength against the Japanese yen. So I'm definitely interested in this one work and will track it very closely in the next few sessions. Now I also wanted to update you on Aussie dollar against the New Zealand dollar. As you know, we are long on this one for the last what, 10 days or so. So actually I updated the wave count 2 days back, as you know, and I'm tracking this as a potential bullish reversal. This is wave 1, this was wave 2, then we got wave 3 and wave 4 pullback, and then this was a 5th wave to the upside. Okay, but what really matters is a recent reversal from the highs, which was clearly in 3 waves. Okay, we also retraced back to the area of former wave 4 here. Okay, but notice that we actually retraced back to the starting point of this 4th wave, which is normal because wave 5 was quite extended, okay, compared to wave 3 and wave 1. So normally when 5th wave will be the longest wave, coming correction of a higher degree will retrace towards the starting point of a wave 4, which was here, okay, not the end of a wave 4, which was here. Okay, so actually I'm not surprised to see a bounce here from 38.2%, which is also usually my minimum expectations before I can call any end of a corrective price reversal. So for now it looks like a nice jump to the upside. We have seen slight break above the upper trend line here and now reversing, which is ideally wave 1 and wave 2. Okay, so wave 1, wave 2, wave 3, 4, and 5. So actually I'm staying bullish here. We have stops, as you know, above 104.60. We have around our break even. So looks like that we could see a nice push to the upside here. So definitely I will not update this trade yet. I will just leave it working. Okay. Also another thing that you just see it here is potential head and shoulders pattern. Okay, here is 4-hour chart, so you have here left shoulder, head, and right shoulder, and then you have here a neckline. Okay, I don't like head and shoulders as a continuation patterns, but so far it fits very nicely into our picture with the Elliott wave. Okay, so That's it for now. Thank you very much for your attention, and I will post more charts on the intraday.